Hello my friends, Mia DeBolt here bringing you more transparency in trading. Thank you so much for joining me. Today is day one of my repeat challenges for the FTMO and the funded trader. So today I actually took 2 trades and I'll be reviewing those in a second, but I just wanted to catch you up on what I was doing in the meantime. So since the last time that I actually closed out my challenges and I started the repeat challenges today, I've actually been studying ICT, and so I've actually been tape reading and demo trading with ICT as he's live streaming on YouTube. So that has been pretty successful, and so today I felt pretty comfortable doing that again today. So shh. Don't tell him that I'm actually trading with him, but I actually wanted to share with you the trade that I took this morning on my own, and then also the trade that I took in the afternoon during his live session. Okay, so first and foremost, I did want to share something that I've really found valuable, and it's something that I'm actually going to go through every single morning, and it actually helped me to preserve some capital this morning because I was actually looking at my breaker pattern, and because the DXY was not in agreement, it was not going down when the other indices were going up, then it actually looked like a breaker pattern, but it was not. And that was a close call because I almost pushed the button on that. But first and foremost, let's review the questions that I actually asked, and you can feel free to borrow these as well. Okay, so I found these in the Twitter feed on ICT's Twitter, and this is by Estera. And so Estera shared this on 3/22, and I thought it was really valuable because it shares with you exactly what questions to trade for high probability, but then also what to do in response. So did we have a big overnight move? No. But we did have a large range day yesterday, and why did we do that? Because we had FOMC. So in both of those cases, you just use caution and wait for the PM session. So that was something that I was considering this morning, was just waiting for the PM session. However, I did trade in the morning. Was the last trading session a big range? No, London was kind of a consolidation, so it's Asian. And was it a bank holiday? No, it wasn't a bank holiday, but if it is a bank holiday, you treat it like it's a Monday, or you turn the charts off. Okay, so medium or high impact news? Yes, there's medium impact news and high impact news. And so I'll actually cover that in the trade review. So 5:30 Pacific Standard Time, we did have high impact news. And so I was watching for a possible setup. Did I already hit my daily profit target? No. And that's something that to consider, not to be greedy. And did I take any losses? So don't revenge trade, turn the charts off. Do we have high impact news such as FOMC, CPI, Fed chair speaking? That was not today, it was yesterday, and we did have that, and we can see that in the charts. So waiting until the next session, or waiting 15 to 30 minutes after that session. Okay, so it's not NFP week, and I'm going to be tape reading only Wednesdays of NFP week. So these last 2 questions are the ones that I actually added and I shared on Twitter. Are the 3 indices in agreement? So if we are, then it's a high probability setup. If they're all not in agreement at all, they're not going in the same direction, then we're likely in a high resistance liquidity run. And then is the DXY also opposite and it's dropping while the indices are going up? So that would be another high probability setup. And if it's not, then high resistance liquidity runs. So asking these type of questions can really help you to be aware of what the market conditions are like. Okay, so let's dive into the charts and see what trades I actually took. So when I jumped on the charts this morning, we did have the big drop on FOMC and the big drop for the DXY. And I was expecting the DXY to start pushing up because it did have a big daily open gap. And then it also reacted from the February monthly open gap, and it had a lot of imbalance up here. So I was expecting the indices to start going down. There was a SIBI up here, and so that's kind of where I was expecting price to kind of push up a little bit more, take buy side, and then start pushing down. So that was my expectation for the morning. I had buy side set up and sell side, and so we can kind of fast forward to where my actual trade started. Okay, so this is kind of where I'm marking up the open range gap, and so I was expecting price to actually push up for the DXY and to actually push down for the ES. And so this is kind of a little bit of a shift because I am watching the ES and trading the CFD, so it's going to be a little bit different. However, it's the same type of price actions, and so this is what I'm watching. I'm watching for that displacement. So this is kind of where I make my first mistake, is I'm not staying on that 5-minute time frame, and so I go back to the 1 minute. If you look at the 5-minute, it's just a doji candle, and so it was filling some imbalance. I'm entering here, and so I'm expecting that fair value gap to stay open, but it doesn't. So here's where I'm looking at the DXY. It's actually pushing up, which is nice, but this is accumulating way too much. It's also creating fair value gaps on the upside, and so this is not exactly the price action that I'm looking for. So one of the teachings that ICT gives is to maybe reduce your risk 0.5%, so getting out at maybe break even at 0.5%. So I have 1% risk on this, and I actually do think about getting out of half of my position. Okay, so you can see here that I had half of my position, and I did actually hesitate, and there you go, it stopped me out. So 1.04, I was in this for all of about 10 to 12 minutes, and it did go up to that daily fair value gap, to the high of that, and that weekly open gap. And so that was something that I am going to log and make sure that I account for those in the future, but it ended up going higher anyway. So I'm really happy with how I just kept that stop loss in the same place. What I might do differently is just close the position altogether and just wait for more information. And so that's what I'll do next time. The other piece of this puzzle that was really big and the red flag was the orange folder news that I didn't account for. So 7 a.m. my time, that big push up was because of the orange folder news, and so that's something that I need to account for in the future as well. Okay, so that was a loss on the morning session, so 1.04 on the funded trader and a loss of 0.93 on FTMO. So according to my trading plan, I actually reduced my risk by half, and I didn't end up taking any more trades in the morning. Okay, so this is the start of the PM session. We also had a live ICT live stream on YouTube, and so I was tuning into that, so shh. So to be honest, I was actually looking at what he was looking at, and I was already expecting bearishness. I was looking to sell, and I was expecting the big open range gap to be filled. So that's something that I was considering. There was still a big daily open gap here for the DXY as well. So this big open range gap was something that I was looking for it to be filled. Okay, so I am listening to ICT. There's a nice bullish push for the DXY, which would indicate a nice bearish push for sell side on the indices. And so this is kind of where I'm looking for an entry. Now, to be completely honest, I was looking at this fair value gap as my entry because I was measuring this, and it was a 5-minute fair value gap, a 1-minute fair value gap, and a premium. And so that's kind of where I was looking for price to go. But because ICT was so adamant about that actually staying open, I actually entered lower. So I was confident more because I was borrowing his confidence in price action. Okay, so this is what the 15-minute looks like, is breaking structure. It's going down to a discount, and it's also starting to fill that open range gap. So this is where I'm listening to ICT, and I'm hearing that, the top of the open range gap is very sensitive. It's something that he's looking for it to stay. And I have been practicing on paper trading. I've been practicing on demo trading to actually sell in up close candles and to buy in down close candles. So, okay, so very shortly I'll be entering. And you can see here that my risk is only 0.5%, so it's half of the morning. And I've also lowered my stop to 5 pips because it shouldn't go any higher than this, and that's where I enter. So I do enter on a bullish candle, and so that's something that I've been practicing so that I'm not so fearful when I'm selling on an up candle or vice versa. Okay, so I'm going to fast forward this because ICT kind of walks through this, and you can see that he actually says that it's okay for price to actually take these highs, and that's kind of where I was a little bit nervous because my stop is right there at that short-term high. However, I made the decision to accept the risk, and if I was stopped out, I would actually re-enter with a 0.5% risk. So I was already planning on actually doing that if price actually went back up to that fair value gap. Okay, so I'm just going to fast forward this because it was a high resistance liquidity run. There was a lot of back and forth. It gave some and then it took it away. So I believe I had to endure this for about 12 minutes or so from my entry. So this was the candle I entered on, and it did come back up here, fill some more of that fair value gap, but I do have that fair value gap as resistance. So that's kind of where I was watching that and studying that. It's something that I was expecting that to be actually respected. And so you can see here that the consequent encroachment is traded to, and then I do believe that it actually goes all the way up to the top of that fair value gap and then starts breaking down. Okay, so there's nice displacement there. It gives some back, and then it starts going back up again, but then it starts to return down. So it does use that fair value gap as resistance. And so that's kind of where I felt like I was onside, I was going in the right direction. It's going to fill that open range gap, and I was feeling like I could trust this trade a lot more. So it starts extending out. It's 11:21, and I'm just watching this. It does give some, and then it takes some back. And so it's not a low resistance liquidity run, but I am trimming my risk because I'm not expecting it to go any higher than that short-term high. And so that's kind of where I do end up managing this trade. And this is the CFD. So this is exactly the same trade. It's just on the CFD. This is what I'm trading on FTMO. And so that's something that I wanted to show because it is very similar. Okay, so now I'm looking to close out most of my position at that short-term low because I'm not sure if it's going to continue down for that second sell side liquidity. So I have the majority of my position locked and loaded to actually take that off at that short-term low. So once that short-term low is taken and taken with authority, I actually close out those partials and I allow the rest to actually go a little bit. And I end up closing the rest of it out as well because I did recoup my morning loss and it did react from that low of the daily fair value gap. And so I just moved to the sidelines because now it's all about studying what ICT is teaching. It did end up going lower and going towards a new week open gap. And so that's kind of where I was really eager to actually enter again. However, I just was ready to be a student at that point. So I did actually go to my terminus target, and I'm really happy with the way that I traded. I did borrow ICT's confidence and some of his analysis. However, I was looking at the sell anyway, so it was just about my entry. So just to recap on that trade in the afternoon, I did have a 1.3% win on FTMO and a 1.2% win on the funded trader. So I recouped what I had lost. I had 0.37% on the FTMO at the end of the day. And so being in profit is better than being at zero and being in negative. At the end of the day with the funded trader, I was 0.16 in profit. So all in all, that second trade took about 22 minutes to hit my terminus target. And so that's something that I like to see, is something that's fairly quick. I don't have to endure too much drawdown. And so there was a little bit of drawdown. There was a lot of back and forth. And I was already anticipating that because of the big range day that we had yesterday. So here's the recap of the FTMO. And so you can see that I actually had some profit today. So this is day one, and I do have 3 trades. So the morning session, I had a loss, and then I recouped it in the afternoon with a partial, and then eventually closing it out. On the funded trader, I have day 1 in the books. So I am at 0.16% profit. I have 33 days and 21 hours remaining. So I'm going to be watching that like a hawk. Okay, so here's my loss from the morning and then my 2 partials in the afternoon. So that concludes day 1. Thank you so much for joining me, my friends. If you aren't subscribed already and you're not following me on this journey, make sure that you subscribe below because I do plan on passing these challenges this time around, and I do have a slightly different strategy this time. So for the first 3 weeks, I'll be focused on building up that profit cushion, really building it to a place where if I pass the challenge and I pass the phase, then that's great. And if I'm in profit by the time it's the 4th week, then I have a different strategy. So the 4th week, if I do get to that point, I'll be looking to actually get an extension for FTMO and or pass the challenge altogether. And I'll also be using different risk management. So I'll share that with you when the time comes, and I look forward to sharing more trades with you. All right, my friends, remember to subscribe below. If you're getting value from these videos, make sure that you smash the like button, and I'll see you in the next trade. All right, see you soon. Bye.